Welcome to ForexTV.com. Today's Thursday, July 17th. I'm Remy Hookie for New York Forex Market Buzz. The U.S. dollar is holding on to gains against the yen, but is lower versus the euro. Earlier today, the ECB's Wellink said that the slowing economy in the eurozone would not reduce inflation, which added to gains for the euro. And taking a look at the latest headlines from the CP News Desk, there were a number of releases this morning from the U.S. and Canada, including the Philadelphia Fed's manufacturing survey for June and U.S. weekly initial jobless claims, which rose less than expected. In Canada, the Bank of Canada released its summer monetary policy report, which was followed by comments from BOC Governor Mark Carney. In the U.S., markets received the July Philly Fed manufacturing survey, which came in at minus 16.3 in July to mark the 8th consecutive monthly decline. The General Activity Index came in at minus 16.3 from June's minus 17.1, led by negative figures in new orders, employment, and shipments. Meanwhile, U.S. initial claims for unemployment benefits rose much less than expected by 18,000 to 366,000 in the week ending July 12th. Continuing claims fell back 81,000 for the week ending July 5th. And taking a look at housing starts, due to a change in the housing code for New York City, U.S. housing starts came in above expectations with a month-over-month rise of 9.1%. Joining me this afternoon to discuss the latest in the FX market is Vasily Serebriakov, currency strategist at Wells Fargo here in New York. Good afternoon, Vasily.
Hi, Remy.
Thanks for joining me today.
Thank you.
Well, we're heading into the end of the week with overall market conditions less volatile than in the past three sessions. Now, tomorrow the data front is sparse with German PPI on tap, but the data front in the U.S. is quiet. So let's start out with a look at euro-dollar. While we keep one eye on the broader market and also crude oil prices, heading into the final trading day of this week, if you could give us your fundamental and technical forecast for euro-dollar.
Well, as you mentioned, we're not really covering any new ground today. I would say that the mix of data and events was slightly dollar positive, although for sure as far as data is concerned, some of the numbers weren't as good as they looked. For example, the housing permits and housing starts were distorted by New York City, so the numbers excluding New York City were actually weaker than expected. For example, housing starts fell by 4%. The decline in oil prices that we saw this week, as well as a better tone for equities, are helping the U.S. dollar somewhat, but we're really still trading within the current ranges, and we would tend to view any rallies in the dollar as just corrective bounces. Looking ahead into tomorrow, there's really nothing on the U.S. calendars. We would watch the earnings data. We have Citigroup reporting tomorrow. We would expect the current ranges to hold. So we're looking at the 159, 158 range, going into tomorrow, and we would expect that to hold.
Okay, Vasily, now that we've covered euro-dollar, let's shift our focus over to cable. The UK currency is back above the 2 handle against the US currency and has been extending gains since the London session. Meanwhile, euro-sterling is seeing downward pressure, and the cross is bouncing from the triangle bottom. But for cable against both the euro as well as the US currency, what is your strategy?
Well, we think sterling is one of those currencies that are not necessarily strong in their own right. I mean, they look strong because the dollar is weak. So our view is fairly sterling negative. However, we think, as far as the euro against the sterling cross remains within current ranges, i.e. between 0.79 and 0.80, we think that cable should basically keep up with the euro against the dollar. So again, we're looking for the cable price to orbit $2 against the pound. Again, there's no significant data or events to change that into tomorrow, and we would expect the ranges to hold.
Okay, well, now that we've covered euro as well as sterling, let's shift our focus over to the Japanese yen. Now, as I mentioned earlier, dollar yen is at the upper range of session highs in New York afternoon trade, and U.S. equities are continuing to seesaw in today's session. Now, meanwhile, euro yen on the hourly charts has been gaining steadily since the overnight session and is now hovering around the 167.80 level. So for dollar yen as well as the yen crosses, including euro yen, what is your short-term forecast?
I think the yen is definitely the weak link, among the G10 currencies today. It's the correlation between equities and yen is not as strong as it used to be, but for sure the Japanese yen remains very sensitive to those short-term fluctuations in the equity market. We don't think the troubles with the U.S. financial sector are by any means over. In that sense, we would not expect significant upside for dollar yen from here, and consequently, we don't think the euro yen is likely to reach the next significant resistance level, which would be 169.65. So for tomorrow, we would expect dollar yen to remain capped by 106, 106.25.
Okay, Vasily, now that we've covered the yen, I do want to shift our focus over to the commodity currencies. Earlier, Bank of Canada's Carney said in his statement that he sees downside risk to commodity prices. Now, earlier the CRB fell to session lows, and this did add to renewed pressure on the Aussie against the U.S. currency. The Aussie did see gains against the U.S. currency as the Aussie advanced against the New Zealand currency, the Kiwi. So quickly, Vasily, if you could give us your outlook for the Aussie as well as the other dollar block currencies.
Well, the Australian and the Canadian dollars are the two currencies that we think are fundamentally strong. So this is the case of favoring those currencies in their own right rather than the weakness in the U.S. dollar. I think the comments from Bank of Canada governor were basically as expected. We expect the Canadian dollar to trade around parity for now. As far as the Australian dollar is concerned, we remain bullish, and we see a rally towards parity with the U.S. dollar within 1 to 3 months. Again, tomorrow we could see a little bit of a range trade. It looks like commodity prices are quite subdued at the end of the week, and I think that oil prices and gold prices should not see a significant bounce tomorrow in that sense. I think the Australian dollar should, again, like the rest of the majors, probably remain within familiar ranges.
Okay, Vasily, we're all out of time for today's interview. Thank you very much for insight, and thank you very much for joining me today.
Thank you.
This has been your Forex Market Buzz with Vasily Serebriakov, currency strategist at Wells Fargo. I'm Remy Hoki. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.